Question 1. Normal practice question. Topic: Underwriting and premium determination. What is the primary reason why insurance companies consider occupational classification during the underwriting process for disability insurance? A. To determine the maximum benefit period available for the insured. B. To assess the insured's likelihood of becoming disabled based on job risk. C. To calculate the age-based mortality risk of the insured. D. To ensure the insured meets the legal licensing requirements for coverage. Answer: B. To assess the insured's likelihood of becoming disabled based on job risk. Explanation: Occupational classification is a critical factor in underwriting disability insurance because it helps insurers evaluate the level of risk associated with a job. Certain occupations, such as those requiring physical labor or hazardous tasks, are more likely to lead to disability claims. Insurers use this information to determine premiums and coverage terms. Option A is incorrect because the maximum benefit period is typically determined by policy terms, not occupational classification. Option C is incorrect as occupational classification pertains to disability risk, not mortality risk. Option D is incorrect as occupational classification is unrelated to licensing requirements. Relevant rule: underwriting guidelines emphasize occupational risk as a core determinant of pricing and coverage, aligning with risk classification principles in insurance. Question 2. Scenario-based question. Topic: Claims and benefits. Scenario: Mrs. Jensen, a school teacher in North Dakota, recently filed a disability insurance claim after being diagnosed with a chronic illness that prevents her from performing her teaching duties. Her policy has an elimination period of 90 days and provides benefits under the own occupation definition. After filing the claim, she started working part-time as an administrative assistant at a local company. What is the most likely outcome regarding her disability benefits? A. Mrs. Jensen will lose all benefits since she is now employed. B. Mrs. Jensen will receive partial benefits based on the residual disability clause in her policy. C. Mrs. Jensen's claim will be denied because her new job is unrelated to her original occupation. D. Mrs. Jensen will continue to receive full benefits since she cannot perform her teaching duties. Answer: B. Mrs. Jensen will receive partial benefits based on the residual disability clause in her policy. Explanation: Disability policies within own occupation definition pay benefits if the insured cannot perform the specific duties of their primary occupation. If the policy includes a residual disability clause, partial benefits are provided to insured individuals who can work in a different capacity while recovering or managing their disability. Option A is incorrect because partial work typically does not disqualify a claim under a own occupation policy. Option C is incorrect since the own occupation clause evaluates the ability to perform the original job, not the new one. Option D is incorrect because full benefits are typically reserved for total disability, not partial employment scenarios. Relevant rule: North Dakota regulations require clear definitions of total and residual disability in policies, ensuring fair benefit allocation. Question 3. Normal practice question. Topic: Disability insurance policy riders. Which disability insurance rider allows policyholders to purchase additional coverage in the future without proving insurability? A. Waiver of premium rider. B. Future purchase option FEO rider. C. Cost of living adjustment COLA rider. D. Social Security offset rider. Answer: B. Future purchase option FPO rider. Explanation: The future purchase option FPO rider is designed to enable policyholders to increase their coverage as their income rises without undergoing additional medical underwriting. This rider is particularly useful for young professionals expecting income growth. Option A is incorrect because the waiver of premium rider only waives premiums during periods of disability. Option C is incorrect as the COLA rider adjusts benefits to keep pace with inflation but does not allow for new coverage purchases. Option D is incorrect since the Social Security offset rider reduces benefits if the insured receives Social Security Disability Insurance (SSDI). A relevant rule: disability insurance riders are optional add-ons that enhance policy flexibility, and insurers must disclose their terms clearly per North Dakota regulations. Question 4. Normal practice question. Topic: Social Security Disability Insurance (SSDI). Which of the following best describes the interaction between Social Security Disability Insurance (SSDI) benefits and private disability insurance? A. SSDI benefits are entirely separate from private disability insurance with no impact on the payout. B. SSDI benefits are generally deducted from private disability insurance benefits if the policy includes a Social Security offset rider. C. SSDI benefits automatically increase the amount of private disability insurance benefits received. D. Private disability insurance benefits are paid first and SSDI benefits are deducted afterward, regardless of the policy terms. Answer: B. SSDI benefits are generally deducted from private disability insurance benefits if the policy includes a Social Security offset rider. Explanation: many disability insurance policies include a Social Security offset rider that reduces the benefits paid by the insurance company if the insured receives SSDI benefits. This is to prevent the insured from receiving overlapping benefits, essentially receiving more than they would have been entitled to based on their income. Option A is incorrect because SSDI benefits can affect private insurance benefits if the policy has a Social Security offset rider. Option C is incorrect since SSDI benefits do not automatically increase private disability insurance payouts. Option D is incorrect because the offset is not automatic in all policies. It depends on whether the policy includes an offset rider. Relevant rule: the Social Security offset rider is commonly included to ensure benefits do not exceed a certain percentage of the insured's pre-disability income, aligning with industry standards and North Dakota regulations. Question 5. Normal practice question. Topic: renewability and termination of coverage. Which of the following provisions in a disability insurance policy prevents the insurer from cancelling coverage for a policyholder as long as premiums are paid on time? A. Non-cancelable. B. Guaranteed renewable. C. Cancelable. D. Optional renewable. Answer A. Non-cancelable. Explanation: a non-cancelable provision means the insurer cannot cancel the policy, increase premiums, or alter the terms as long as the insured continues to pay premiums. This offers the policyholder greater security since the insurer cannot change the policy terms for any reason other than non-payment of premiums. Option B is incorrect because guaranteed renewable means the insurer can renew the policy but may increase premiums based on the insured's age or other factors. Option C is incorrect because cancelable policies allow the insurer to cancel the policy at any time with appropriate notice. Option D is incorrect since optional renewable policies give the insurer the option to renew or cancel coverage based on the terms of the policy. Relevant rule: non-cancelable policies provide the highest level of protection for the policyholder under North Dakota insurance laws. Question 6. Scenario-based question. Topic: policy provisions and features. Scenario: Mr. Andrews, a construction worker, has a long-term disability insurance policy that defines disability as the inability to perform his own occupation. After an accident, he is unable to return to his job as a construction worker but finds a less physically demanding job as a supervisor in a related field. The policy offers benefits for 24 months. What should Mr. Andrews expect regarding his disability benefits? A. Mr. Andrews will receive full benefits for the duration of the policy since he cannot return to his original job. B. Mr. Andrews will receive partial benefits based on his reduced earnings from the new job. C. Mr. Andrews will lose all benefits since he found a new job. D. Mr. Andrews will receive full benefits for the first 24 months, then the benefits will be reduced. Answer B. Mr. Andrews will receive partial benefits based on his reduced earnings from the new job. Explanation: under an own occupation definition, Mr. Andrews is considered totally disabled if he cannot perform the duties of his specific job, even if he can perform other types of work. However, since he has found a new job in a related field, he may be eligible for partial disability benefits, typically based on the difference between his pre-disability income and his new income. Option A is incorrect because partial benefits are usually paid in the case of returning to a different occupation. Option C is incorrect because finding another job does not automatically disqualify Mr. Andrews from receiving benefits if he is still considered partially disabled. Option D is incorrect as the benefits would not automatically switch after 24 months based solely on returning to a new job. Relevant rule: the own occupation provision provides specific disability coverage, but partial benefits are provided when the insured can work in a reduced capacity. Question 7. Normal practice question. Topic: legal and ethical considerations. Which of the following is a primary responsibility of an insurance producer when selling disability insurance in North Dakota? A. To recommend the highest coverage limits available regardless of the client's needs. B. To disclose all relevant policy provisions, including exclusions and limitations, to the client. C. To guarantee that the client will be approved for coverage regardless of underwriting factors. D. To provide a refund of premiums if the client is dissatisfied with the policy. Answer: B. To disclose all relevant policy provisions, including exclusions and limitations, to the client. Explanation: insurance producers have a legal and ethical obligation to provide full transparency regarding the terms of a policy. This includes explaining all exclusions, limitations, and conditions that may affect the client's ability to make a claim. Failing to disclose important policy details can lead to misrepresentation, which may result in legal penalties. Option A is incorrect because recommending coverage solely based on the highest available limits is not an ethical or responsible approach. Option C is incorrect since underwriting factors such as age, health, and occupation may affect coverage approval and producers cannot guarantee approval. Option D is incorrect as premium refunds are not typically offered if the client is dissatisfied unless specified by the insurer or a special clause. Relevant rule: North Dakota's insurance regulations mandate full disclosure by insurance producers, and failure to do so may result in penalties or license suspension. Question 8. Normal practice question. Topic: Group disability insurance. Which of the following is a key difference between employer-paid and voluntary group disability insurance plans? The employer-paid plans typically offer higher benefits than voluntary plans. B. Voluntary plans are always less expensive than employer-paid plans. C. Employer-paid plans do not require underwriting, while voluntary plans do. D. Voluntary plans are paid for entirely by the employer, while employer-paid plans are paid by employees. Answer A. Employer-paid plans typically offer higher benefits than voluntary plans. Explanation: employer-paid group disability insurance plans generally provide higher benefit levels because the employer usually absorbs some of the premium costs. In contrast, voluntary group plans may offer lower benefits and are typically paid by employees, with premiums deducted from their paychecks. Option B is incorrect because voluntary plans are not always less expensive, they can be more expensive for employees as they are not subsidized by employers. Option C is incorrect because employer-paid plans often do not require individual underwriting, but voluntary plans can still be subject to underwriting. Option D is incorrect as voluntary plans are paid by employees, not the employer. Relevant rule: Group disability plans in North Dakota must comply with state regulations regarding eligibility, benefits, and underwriting for both employer-paid and voluntary plans. Question 9. Normal practice question. Topic: Disability income taxation. How are benefits received from a disability insurance policy that is paid for by the employer and considered a group plan taxed? A. The benefits are tax-free to the recipient. B. The benefits are taxable to the recipient if the employer pays the premiums. C. The benefits are tax-free if the recipient paid the premiums. D. The benefits are taxable only if the recipient is receiving more than 100% of their pre-disability income. Answer: B. The benefits are taxable to the recipient if the employer pays the premiums. Explanation: if the employer pays the premiums for the group disability insurance policy, the benefits received are taxable to the recipient. This is because the employer's contributions are considered income and the IRS taxes the benefits as income. If the employee pays the premiums, the benefits are typically tax-free. Option is incorrect because employer-paid premiums result in taxable benefits to the recipient. Option C is incorrect because the employee must pay the premiums for tax-free benefits. Option D is incorrect as taxation is not related to the percentage of income received but rather who paid the premiums. Relevant rule: under the IRS guidelines, disability insurance benefits are taxable if the employer pays the premiums, a standard rule followed by North Dakota insurance providers. Question 10. Normal practice question. Topic: Underwriting and premium determination. Which of the following is most likely to result in a higher premium for a disability insurance policy? A. The insured has a low-risk occupation and a healthy medical history. B. The insured is a smoker and has a family history of chronic illnesses. C. The insured is young and in excellent health. D. The insured is applying for long-term disability insurance with a shorter elimination period. Answer: B. The insured is a smoker and has a family history of chronic illnesses. Explanation: higher premiums are typically associated with higher risk. Smoker status and a family history of chronic illnesses are risk factors that increase the likelihood of disability or health issues, prompting insurers to charge high premiums. Option A is incorrect because low-risk occupations and good health are generally favorable factors that lower premiums. Option C is incorrect since young and healthy individuals are often charged low premiums. Option D is incorrect because a shorter elimination period, which means benefits start sooner, generally leads to higher premiums. However, this is not as significant as the smoking and family health history factors. Relevant rule: underwriting involves evaluating the risk factors of the applicant, and insurers adjust premiums accordingly based on perceived risk. Question 11. Normal practice question topic: legal and ethical considerations. Which of the following actions would be a violation of ethical selling practices in the disability insurance industry in North Dakota? A. Providing the client with a complete comparison of available policy options. B. Failing to disclose the policy's exclusions and limitations to the client. C. Recommending a policy that matches the client's stated needs and budget. D. Offering the client a free consultation to discuss their coverage options. Answer: B. Failing to disclose the policy's exclusions and limitations to the client. Explanation: ethical selling practices require full transparency. Not disclosing exclusions and limitations is a violation of the law and ethical standards. The client needs to fully understand the policy to make an informed decision, and withholding this information can lead to claims of misrepresentation. Option A is incorrect because providing complete and clear comparisons of options is a responsible practice. Option C is incorrect as recommending a policy that suits the client's needs is the goal of ethical selling. Option D is incorrect because offering free consultations is common and legal in the industry. Relevant rule: North Dakota insurance regulations require full disclosure of policy details, including exclusions and limitations, to ensure ethical selling practices. Question 12. Scenario-based question topic: claims and benefits. Scenario: Ms. Nelson, a 40-year-old executive, suffers a back injury and is unable to perform her usual duties for 6 months. She files a claim for long-term disability insurance. The insurance company determines that Ms. Nelson is not totally disabled according to their definition, as she is still able to work in a different position within the company. What should Ms. Nelson do to ensure her benefits continue? A. Appeal the decision, arguing that she cannot perform any job, even a different one. B. Accept the insurance company's decision as she can still work in a different position. C. Request to be reassigned to a more appropriate role within the company to qualify for benefits. D. Negotiate with the insurance company to increase the benefit amount based on her pre-disability salary. Answer A. Appeal the decision, arguing that she cannot perform any job, even a different one. Explanation: the definition of a total disability can vary based on the insurance policy. If the policy uses in any occupation definition, Ms. Nelson could be denied benefits if she can work in a different capacity. To challenge this decision, she could appeal, stating that her disability prevents her from working any job, not just her original role. Option B is incorrect because accepting the decision may result in her not receiving benefits if she truly cannot perform any job. Option C is incorrect since reassignment does not necessarily affect her eligibility for long-term disability benefits under the any occupation definition. Option D is incorrect because negotiating for a higher benefit amount is not part of the claims process unless the terms of the policy allow it. Relevant rule: disability insurance policies often include provisions that require a higher standard of disability, such as any occupation criteria, which can lead to disputes regarding eligibility. Question 13. Normal practice question topic: disability insurance policy riders. Which of the following riders is typically added to a disability insurance policy to help adjust benefits in line with inflation? A. Waiver of premium rider. B. Return of premium rider. C. Cost of living adjustment COLA rider. D. Future purchase option FEO rider. Answer: C. Cost of living adjustment COLA rider. Explanation: the cost of living adjustment COLA rider increases disability benefits to keep up with inflation, ensuring the benefits maintain their purchasing power over time. This rider is commonly added to policies to protect the insured from inflation's effects on their benefit amounts. Option A is incorrect because the waiver of premium rider allows premiums to be waived during a period of disability but does not address inflation. Option B is incorrect because the return of premium rider refunds premiums paid if no claims are made during the life of the policy. Option D is incorrect because the future purchase option rider allows the policyholder to increase coverage at certain intervals without additional underwriting but does not address inflation directly. Relevant rule: COLA riders are an essential tool in maintaining the real value of disability benefits as the cost of living rises. Question 14. Normal practice question. Topic: Disability income taxation. If a policyholder pays for their disability insurance premiums with after-tax dollars, how are the benefits received from the policy taxed? A. The benefits are fully taxable. B. The benefits are partially taxable depending on the policy's terms. C. The benefits are tax-free. D. The benefits are tax-free only if the policyholder is permanently disabled. Answer: C. The benefits are tax-free. Explanation: when the policyholder pays disability insurance premiums with after-tax dollars, the benefits received from the policy are generally tax-free. This is because the premiums were paid with income that was already taxed. Option A is incorrect because benefits from policies paid with after-tax dollars are not taxed. Option B is incorrect because there is no partial taxation if the premiums were paid with after-tax dollars. Option D is incorrect because the taxation of benefits does not depend on whether the disability is permanent or temporary. Relevant rule: the tax treatment of disability insurance benefits follows IRS guidelines regarding after-tax premium payments. Question 15. Normal practice question. Topic: Social Security Disability Insurance (SSDI). Which of the following best describes the eligibility criteria for Social Security Disability Insurance (SSDI)? SSDI benefits are available to all U.S. residents who have paid Social Security taxes for at least 10 years. B. SSDI benefits are available to individuals who have worked in jobs covered by Social Security and are unable to work due to a disability. C. SSDI benefits are available only to individuals who are 65 years or older. D. SSDI benefits are available to individuals who are under the age of 30 and have never worked. Answer: B. SSDI benefits are available to individuals who have worked in jobs covered by Social Security and are unable to work due to a disability. Explanation: to qualify for SSDI, an individual must have worked in a job that is covered by Social Security and have paid into the system through payroll taxes. Additionally, the individual must have a disability that meets the Social Security Administration's criteria, preventing them from engaging in substantial gainful activity. Option A is incorrect because SSDI eligibility depends on work history, not just the number of years paying Social Security taxes. Option C is incorrect because SSDI benefits are available to individuals who are disabled, not necessarily those 65 or older. Option D is incorrect because individuals under 30 who have never worked would not be eligible for SSDI benefits. Relevant rule: SSDI eligibility is based on work history, disability severity, and the inability to engage in substantial gainful activity. Question 16. Normal practice question. Topic: Policy provisions and features. Which of the following features in a disability insurance policy allows for continuation of coverage without further premiums during the period of disability? A. Waiver of premium rider. B. Return of premium rider. C. Future purchase option rider. D. Non-cancelable policy provision. Answer A. Waiver of premium rider. Explanation: the waiver of premium rider allows the policyholder to have their premiums waived while they are disabled and unable to work, ensuring that their coverage remains in force even if they cannot make premium payments due to their disability. Option B is incorrect because the return of premium rider refunds premiums if no claims are made not based on disability. Option C is incorrect because the future purchase option rider allows for future coverage increases but does not waive premiums. Option D is incorrect because a non-cancelable policy provision prevents the insurer from cancelling the policy, but it does not waive premiums during disability. Relevant rule: the waiver of premium rider is an important feature in disability insurance policies, ensuring that the insured does not lose coverage due to an inability to pay premiums while disabled. Question 17. Normal practice question. Topic: Underwriting and risk assessment. Which of the following factors is typically considered when underwriting a disability insurance policy? A. The applicant's age, occupation, and income level. B. The applicant's social media activity and hobbies. C. The applicant's choice of primary care physician. D. The applicant's marital status and number of dependents. Answer A. The applicant's age, occupation, and income level. Explanation: underwriting for disability insurance typically considers the applicant's age, occupation, and income level, as these factors directly impact the likelihood of disability and the amount of benefits that might be needed. A high-risk occupation, e.g., construction worker or older age, can increase the likelihood of a disability claim. Option B is incorrect because Social media activity and hobbies, while important for certain risks, are not typical underwriting criteria for disability insurance. Option C is incorrect because the choice of primary care physician does not directly affect underwriting decisions. Option D is incorrect because marital status and dependence, while relevant in some personal insurance products, are generally not as significant in disability underwriting compared to the risk factors related to occupation and income. Relevant rule: underwriters evaluate risk factors to determine the level of coverage and premiums. Question 18. Scenario-based question. Topic: disability insurance claims process. Scenario: John, a 32-year-old professional photographer, has been unable to work due to a severe eye injury. He files a claim under his disability insurance policy. The insurance company denies the claim, stating that his injury is not covered under the terms of his policy. John believes the policy should cover his condition. What should John do next? A. Accept the insurance company's decision and stop pursuing the claim. B. Seek legal advice and potentially file an appeal to challenge the insurer's decision. C. Try to modify the terms of the policy to include his eye injury. D. Apply for government assistance as his only option. Answer: B. Seek legal advice and potentially file an appeal to challenge the insurer's decision. Explanation: if John believes that his injury should be covered under the terms of the policy, he should appeal the insurance company's decision. Seeking legal advice may help him understand his rights and the options for pursuing the claim. Many policies include an appeals process for denied claims. Option is incorrect because accepting the denial may not be in John's best interest if the injury should be covered. Option C is incorrect because John cannot modify the terms of the policy after the injury has occurred. Option D is incorrect as government assistance is typically not the first option unless private insurance is unavailable or inadequate. Relevant rule: insurance policies provide a claims appeal process and ensure parties have the right to dispute claims decisions within a specified period. Question 19. Normal practice question. Topic: disability insurance benefits. What is the primary purpose of the elimination period ECA disability insurance policy? A. To delay the start of benefits for a set period to reduce the insurer's risk. B. To limit the total amount of benefits an insured can receive over their lifetime. C. To extend the duration of benefits to the insured's dependents. D. To increase the premium for policyholders under 30 years of age. Answer A. To delay the start of benefits for a set period to reduce the insurer's risk. Explanation: the elimination period, often called the waiting period, is the time between the onset of a disability and when the insured starts receiving benefits. This period helps the insurer manage risk by ensuring that the disability is significant and long enough to warrant the payout of benefits. Option B is incorrect because the elimination period does not limit the total benefits but only delays the onset of benefits. Option C is incorrect because the elimination period does not affect dependents coverage. Option D is incorrect because the elimination period does not relate to the age of the insured in determining premium rates. Relevant rule: the elimination period helps control costs for insurers and reduces the frequency of claims for short-term disabilities. Question 20. Normal practice question. Topic: legal and regulatory issues. Which of the following is a key characteristic of a non-cancelable disability insurance policy? A. The insurer can increase the premiums after the policy is issued. B. The insurer has the right to cancel the policy at any time if the insured does not meet certain health requirements. C. The insurer cannot cancel the policy, nor can the premiums be increased after issuance. D. The policy's benefits can be reduced if the insured's health deteriorates. Answer: C. The insurer cannot cancel the policy, nor can the premiums be increased after issuance. Explanation: a non-cancelable policy means that the insurer cannot cancel the policy or increase the premiums after it is issued, regardless of changes in the insured's health. This provides the insured with greater stability and predictability in their coverage. Option is incorrect because a non-cancelable policy prevents premium increases after issuance. Option B is incorrect because the insurer cannot cancel the policy under a non-cancelable policy even if the insured's health changes. Option D is incorrect because the benefits cannot be reduced in a non-cancelable policy. Relevant rule: non-cancelable policies provide strong protection against changes in terms by the insurer. Question 21. Normal practice question. Topic: disability insurance policy riders. Which rider is typically added to a disability insurance policy to ensure that benefits keep pace with inflation? A. Waiver of premium rider. B. Future purchase option FEO rider. C. Cost of living adjustment COLA rider. D. Social security offset rider. Answer: C. Cost of living adjustment, rider explanation. The cost of living adjustment, rider is added to disability insurance policies to increase the benefit amount periodically in order to keep pace with inflation. This ensures that the purchasing power of the benefits remains consistent even as the cost of living rises. Option A is incorrect because the waiver of premium rider waives premium payments while the insured is disabled, but it does not adjust benefits for inflation. Option B is incorrect because the future purchase option (FPO) rider allows the insured to purchase additional coverage in the future without medical underwriting, but it does not adjust benefits for inflation. Option D is incorrect because the Social Security offset rider reduces benefits by the amount of Social Security disability insurance (SSDI) benefits the insured receives rather than adjusting for inflation. Relevant rule: the COLA rider ensures that disability benefits retain their value in real terms over time. Question 22. Normal practice question. Topic: Claims and benefits. Which of the following is typically a requirement for filing a disability insurance claim? A. The insured must provide proof of loss within 30 days of the injury. B. The insured must submit medical documentation that shows the disability is work-related. C. The insured must prove they have been unable to work for a continuous period as defined by the policy. D. The insured must have been employed for a minimum of 12 months. Answer: C. The insured must prove they have been unable to work for a continuous period as defined by the policy. Explanation: in order to file a disability insurance claim, the insured typically must provide evidence that they have been unable to work for a continuous period as defined in the policy's terms. This can include medical records, statements from healthcare providers, and documentation about their work status. Option A is incorrect because the timeline for proof of loss varies by policy and jurisdiction, but it is typically longer than 30 days. Option B is incorrect because not all disability claims require the disability to be work-related, particularly for private disability insurance policies. Option D is incorrect because there is generally no minimum employment requirement for filing a disability claim, though the type of policy, individual, or group may have certain eligibility requirements. Relevant rule: the claims process usually involves verifying the nature and duration of the disability to determine eligibility for benefits. Question 23. Scenario-based question. Topic: Disability insurance fundamentals. Scenario: Jessica, a 45-year-old accountant, purchases a disability insurance policy that defines any occupation as the ability to perform any job for which she is reasonably suited by training, education, or experience. After she suffers a back injury, she finds that she can no longer work as an accountant but is able to perform desk-based tasks in other fields. The insurance company denies her claim, stating that she is capable of working in a different field. What is Jessica's best course of action? A. Accept the decision because she is still capable of working in a different occupation. B. Seek legal advice and appeal the insurer's decision based on the policy's definition of any occupation. C. Start working in another field and report the income to the insurance company. D. Cancel her policy and purchase a new one with better coverage. Answer: B. Seek legal advice and appeal the insurer's decision based on the policy's definition of any occupation. Explanation: in disability insurance, the definition of any occupation plays a crucial role in determining eligibility for benefits. If the policy specifies that the insured can qualify for benefits if they cannot perform any job for which they are reasonably suited by training, education, or experience, Jessica may have grounds for an appeal. Legal advice can help her understand how the policy's definition applies to her situation. Option A is incorrect because Jessica should not accept the denial without challenging it if she believes the decision misinterprets her inability to perform any occupation. Option C is incorrect because working in another field could disqualify Jessica from receiving benefits depending on the terms of the policy. Option D is incorrect because cancelling the policy without addressing the current issue would not resolve her claim. Relevant rule: the policy's definition of any occupation is crucial in determining benefits, and insurers must adhere to the agreed-upon language when evaluating claims. Question 24. Normal practice question. Topic: North Dakota State Insurance Regulations. What is the primary role of the North Dakota Insurance Commissioner in relation to disability insurance policies? A. To approve the marketing materials used by insurance companies. B. To investigate complaints related to unfair insurance practices. C. To set premium rates for all disability insurance policies. D. To directly handle all claims disputes between insured individuals and insurers. Answer: B. To investigate complaints related to unfair insurance practices. Explanation: The North Dakota Insurance Commissioner is primarily responsible for overseeing the insurance industry within the state, including investigating complaints about unfair insurance practices, ensuring compliance with state regulations, and enforcing the law. The Commissioner does not typically set premium rates or handle individual claims disputes directly. Option A is incorrect because while the Commissioner may regulate the content of marketing materials, they do not directly approve them. Option C is incorrect because premium rates are generally determined by the insurers, subject to regulatory oversight, not directly set by the Commissioner. Option D is incorrect because while the Commissioner regulates the insurance industry, they do not directly manage claims disputes, which are typically handled by the insurance companies and the courts. Relevant rule: the Insurance Commissioner plays a key role in consumer protection and ensuring that insurers comply with state laws and regulations. Question 25. Normal practice question. Topic: Legal and ethical considerations. Which of the following is a violation of ethical standards in the sale of disability insurance? A. Explaining the terms and conditions of the policy in detail to the client. B. Recommending a policy that provides the best coverage for the client's needs even if it results in a lower commission. C. Failing to disclose the exclusions and limitations of the policy to the client. D. Offering the client a policy with a flexible payment schedule that suits their budget. Answer: C. Failing to disclose the exclusions and limitations of the policy to the client. Explanation: It is an ethical violation for an insurance producer to fail to disclose important information such as the exclusions and limitations of a disability insurance policy. Full transparency is essential for ensuring that clients understand the terms of the policy and make informed decisions. Option A is incorrect because explaining the policy in detail is an ethical and legal obligation. Option B is incorrect because recommending the best policy for the client, even with lower commissions, is ethical. Option D is incorrect because offering a flexible payment schedule is permissible and beneficial to the client. Relevant rule: ethical selling practices include transparency about policy terms and ensuring that clients are well informed about what the policy covers and excludes. Question 26. Normal practice question. Topic: Policy provisions and features. Which provision in a disability insurance policy allows the insured to renew the policy without providing evidence of insurability? A. Non-cancelable provision. B. Guaranteed renewable provision. C. Waiver of premium provision. D. Residual disability provision. Answer: B. Guaranteed renewable provision. Explanation: a guaranteed renewable provision allows the insured to renew their disability insurance policy without the need to provide evidence of insurability. This ensures that the insured can maintain coverage as long as premiums are paid, regardless of any changes in their health. Option A is incorrect because a non-cancelable provision ensures that the policy cannot be cancelled or premiums increased by the insurer, but it does not necessarily guarantee renewability without evidence of insurability. Option C is incorrect because the waiver of premium provision waives premium payments while the insured is disabled, but it does not affect the renewal of the policy. Option D is incorrect because the residual disability provision pays partial benefits to those who can work part-time due to a disability but does not involve renewability. Relevant rule: the guaranteed renewable provision provides the insured with security that they can continue coverage without requalifying medically. Question 27. Normal practice question. Topic: Disability insurance income taxation. Which of the following statements is true regarding the taxation of disability insurance benefits? A. Disability benefits from an individual policy are always tax-free. B. Disability benefits from a group policy are always taxable to the employee. C. Disability benefits from an individual policy are taxable if premiums are paid with pre-tax dollars. D. Disability benefits are always taxable regardless of how the premiums were paid. Answer: C. Disability benefits from an individual policy are taxable if premiums are paid with pre-tax dollars. Explanation: disability insurance benefits are typically tax-free if the premiums were paid with after-tax dollars. However, if the premiums were paid with pre-tax dollars, the benefits are generally taxable as income. This is important for both individual and group policies. Option A is incorrect because disability benefits from individual policies are not always tax-free depending on how premiums are paid. Option B is incorrect because benefits from group policies are taxable only if the premiums are paid by the employer and not through a pre-tax arrangement. Option D is incorrect because the taxation of benefits depends on whether premiums were paid with pre-tax or after-tax dollars. Relevant rule: taxation of disability benefits depends on the payment of premiums and their deductibility. Question 28. Scenario-based question. Topic: disability insurance policy terms. Scenario: Mark, a 38-year-old construction worker, purchases a disability insurance policy with a 90-day elimination period. After suffering a serious back injury, Mark is unable to work for several months. However, his doctor confirms that he will be able to return to work within 60 days. Based on the terms of his policy, how should Mark proceed regarding his disability benefits? A. Mark should file a claim immediately because he will be unable to work for at least 60 days. B. Mark should wait 90 days before filing a claim, as that is the elimination period. C. Mark should not file a claim because he will be able to return to work before the elimination period is over. D. Mark should file a claim only if his doctor confirms he will not be able to return to work within 90 days. Answer: B. Mark should wait 90 days before filing a claim, as that is the elimination period. Explanation: an elimination period is the amount of time that must pass before disability benefits begin. Since Mark's policy specifies a 90-day elimination period, he cannot begin receiving benefits until that period has passed, even if he is able to return to work before it ends. Option A is incorrect because the elimination period must be met before benefits begin. Option C is incorrect because Mark is still eligible to file a claim once the elimination period is complete, even if he recovers before 90 days. Option D is incorrect because the elimination period is not dependent on whether Mark's doctor confirms he will be unable to return to work after 90 days. Relevant rule: disability benefits are typically not paid until the elimination period is over, regardless of whether the insured is able to return to work early. Question 29. Normal practice question. Topic: policy exclusions and limitations. Which of the following is a common exclusion found in most disability insurance policies? A. Disability resulting from a pre-existing condition. B. Disability caused by accidents occurring while driving. C. Disability resulting from a non-medical cause, such as a natural disaster. D. Disability caused by any mental or nervous disorder. Answer A. Disability resulting from a pre-existing condition. Explanation: a common exclusion in most disability insurance policies is disability resulting from a pre-existing condition. This typically means that if the insured has a medical condition before purchasing the policy that leads to a disability, the policy may not cover benefits related to that condition. Option B is incorrect because disabilities resulting from accidents while driving are generally covered under the policy unless excluded under specific terms. Option C is incorrect because most disability policies cover disabilities caused by non-medical incidents unless explicitly excluded. Option D is incorrect because disability insurance policies often cover disabilities resulting from mental or nervous disorders, though some may limit or exclude coverage for such conditions. Relevant rule: pre-existing condition exclusions are standard in most disability policies to prevent individuals from purchasing coverage for known health issues. Question 30. Normal practice question. Topic: North Dakota state regulations. According to North Dakota state regulations, which of the following is true about the sale of disability insurance policies? A. An insurer must issue a policy to any applicant who can provide a letter of recommendation from a healthcare provider. B. The insurer must provide the applicant with a copy of the policy's exclusions and limitations before the policy is issued. C. The insurer must offer a policy to any applicant who has a pre-existing condition, regardless of the condition's impact on workability. D. An insurance producer may not disclose the insurer's financial ratings to potential clients. Answer: B. The insurer must provide the applicant with a copy of the policy's exclusions and limitations before the policy is issued. Explanation: under North Dakota state regulations, insurers must provide applicants with clear disclosure of a policy's exclusions and limitations before the policy is issued. This ensures that applicants are fully aware of the terms and conditions of the coverage they are purchasing. Option A is incorrect because there is no requirement for a letter of recommendation from a healthcare provider in the application process. Option C is incorrect because insurers may exclude pre-existing conditions or limit coverage for them depending on the policy terms. Option D is incorrect because insurance producers are allowed to disclose an insurer's financial ratings, as this is part of providing full and transparent information to clients. Relevant rule: disclosure of exclusions and limitations is required to ensure transparency and informed decision-making by the applicant.